Now what is the number of shares they have issued? 20,000. But how much the public have subscribed? For 25,000 shares. So after issue, you have to transfer the forfeited shares to capital reserve. What is the entry? Forfeited shares account data to capital reserve. How you can write the narration? Being application money received on 15,000 shares and the excess of rupees 3,000 is been refunded and remaining 2,000 is been transferred to share allotment account. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the session 6 of chapter 1, that is from part B, Accounting for Share Capital. So let us quickly recall what we have discussed in a previous session. So in a previous session, we have solved an important problem on issue of shares. That is, we were discussing the problems on issue of shares for 12 marks. So in today's session also, we shall solve few more problems where a slight difference will be there with each and every problem. Where your journal entry will be same, only slight changes you have to make from one problem to another problem. So we shall see today's problem here. Issue of shares at par. Now this is relating to oversubscription. Now what do we mean by oversubscription? Subscribing more than the shares which is being issued to the public. Okay, now go through the problem. I'll clearly tell you what is this oversubscription. So, for example, a firm might have issued 10,000 shares, but the public have applied or subscribed for 15,000 shares. Then that 5,000 shares which is more than 10,000 or which is over and above 10,000 is called as what? Oversubscription. Now, this is a problem relating to oversubscription, that is issue of shares at par with forfeiture and reissue. So, this is also relating to forfeiture and reissue. Now, go through the problem here. ABC Company Limited issued 20,000 equity shares. Now, what is the number of shares they have issued? 20,000 equity shares of rupees 10 each. The amount was payable as follows. Here we don't have premium because they have clearly told it is being issued at par. Okay, so 10,000, or how they are going to collect that 10 rupees? That is through application, allotment and through call. So in application they have collected 2 rupees, allotment 3 rupees and call 5 rupees. So total 10, and this is issued at par, not at premium. Applications were received for 25,000 shares. Now what is the number of shares they have issued? 20,000. But how much the public have subscribed? For 25,000 shares. So this is known as what? Oversubscription. That is over and above the actual number of shares which is being issued to the public. So that is known as oversubscription. Excess application money was refunded on 5,000 shares. Now they have issued 20,000 shares, but the public have applied for 25,000 shares. So remaining this 5,000 excess shareholders. So their shares is been refunded. So they have paid the application money, that 5,000 shareholders have paid the application money. So that excess money has been refunded to the public. And 20,000 shares were allotted on which the money duly received except the first and final call on 500 shares. Now in the allotment stage what happens? In the application stage, the public have applied more than the actual number which is been issued. So what they have did, so whatever the amount or whatever the excess amount which has been received from the public, so that amount has been refunded to the public and only 20,000 shares they were allotted. So after that they are going to keep it only 20,000 shares. Out of that 20,000 shares, all the money were duly received. They have received the application money, they have received the allotment money, but there are few shareholders who have failed to pay first and final call money on 500 shares. So what we are going to normally do when they are not going to receive the money, they are going to cancel. So the directors will cancel those shares which is known as what? Forfeiture. So here 500 shares held by Akash. So he has not paid the first and final call money. So they are going to forfeit those shares. The directors forfeited these shares and then reissued to Sagar at rupees 7. Here they are going to reissue at a discount. Discount of rupees how much? 3 each. Per share has fully paid up past necessary journal entry. Now hope you are clear with the problem. Only difference is that they have issued 20,000 shares, but the public have subscribed for 25,000 shares. So the excess amount on 5,000 shares what the company have received, that has been refunded. Okay, so only that much difference. Everything seems to be same. So you are going to record the forfeiture entry, you are going to record the reissue entry also. Now come to the first journal entry. So first entry is on what? That is on application. So your first stage is what? Application. You have two entry. One is receiving of application money, and the next one is transfer of application money. Now what is the entry for receiving application money? Bank account data to equity share application account. Now here you have to be very careful. You are going to take this number of shares, that is 25,000, because on 25,000 shares we have received the application money. Not on 20,000. We have to take 25,000 into 2. Okay, so 25,000 into 2, that is 50,000. Your narration remains same, being application money received on 25,000 shares. After receiving this application money, what they have clearly told? So they had to receive only on 20,000 shares and excess amount has been refunded. So what is the entry? Equity share application account, 25,000 into 2, what they have actually received. To equity share capital, how much we require? Only 20,000. So 20,000 into 2, that is 40,000. Remaining 5,000, what the excess amount we have received, that is excess shares amount we have received, that has to be refunded. So it will be transferred to bank account, that is 5,000 into 2, 10,000. Now clearly once again I will explain, that is the shares which is been required is 20,000, but the public have subscribed for 25,000, excess 5,000 we have received. We don't want that 5,000. So what the company have decided? Company have decided to refund these 5,000 shareholders. Clear? So this is about your application stage. So what would be your entry? Equity share application account, 25,000 into 2, equity share capital, actual number of shares 20,000 into 2, refund amount to bank account 5,000 into 2. So how you can write the narration? Being application money received on 25,000 shares and the excess application money is been refunded on 5,000 shares. Now coming to the allotment stage. Allotment stage will be similar. So first entry is due, next entry is receive. So what is the due entry? Equity share allotment account data to equity share capital account. Hereafter we have returned the excess application money. Hereafter we will take what is the actual number of shares which is been required. That is 20,000. Not 25,000, only 20,000 we have to take. So 20,000 into 3, that is 60,000. So what would be a narration? Being allotment money due on 20,000 shares of rupees 3 each. Next, transfer. So we have transfer, that is due entry, equity share allotment account data to equity share capital. Next entry is for what? Receiving of allotment money. So what is the entry? Bank account data to equity share allotment account. Here all the allotment money have been received. So 20,000 into 3, same amount we have to write because all the allotment money have been received. Next one is call. Call stage, here also two entry, one is due, other one is receive. Now what is the due entry? Equity share first and final call account data to equity share capital account. So here 20,000 is the number of shares. What is the value of call? That is 5 rupees. 20,000 into 5. So 20,000 into 5, that is 1 lakh. 1 lakh is on call. So how you can write the due narration? Being allotment money due on 20,000 shares of rupees 5 each. Whether all the shareholders have paid the call money? No. So go through the problem once again. So here first and final call except 500 shareholders. So out of this 20,500 shareholders have not paid, in the sense 19,500 shareholders have only paid the call money. So we have to take only 19,500. So how to write? Bank account data to equity share first and final call account 19,500 into 5. That is how much? 97,500. Write the narration being first and final call money received only on 19,500 shares of rupees 5 each. So clear about the call stage. Now next is what? Forfeiture entry. So 500 shareholders have not paid. We are going to cancel these shares. Okay, so that is known as what? Forfeiture. Now what is your forfeiture entry? Share capital account data to forfeited shares account to equity share first and final call account. So out of this 500 shareholders, 10 rupees we had to receive. So that will be transferred to equity share capital, that is 500 into 10, 5,000. To forfeited shares account, how much we have actually received? So we have received application as well as allotment money. So what is application money? 2 plus 3. So these two we have received, that is 5 rupees we have received, 5 rupees we have not received. Okay, so this 5 rupees has to be transferred to forfeited shares account. What we have not received, that will be transferred to first and final call account. So how to write the entry? So forfeited shares account 500 into 5, that is 2,500, to equity share first and final call 500 into 5, that is 2,500. How you can write the narration? Being 500 shares forfeited for not paying first and final call money of rupees 5 each. This is the forfeiture entry. Next one is what? Reissue. Now at what price they have reissued? They have reissued at rupees 7 each. In the sense 3 rupees is discount. So that discount has to be transferred to forfeited shares account. So how to write the entry then? Bank account 500 into 7. Forfeited shares account 500 into 3. To equity share capital account 500 into 10. Now why it is 7? Because they have reissued at rupees 7 each. And what is the face value of the shares? That is 10. So where 3 rupees will be what? Discount. So this discount will be transferred to forfeited shares account. So your entry will be bank account 500 into 7. Forfeited shares account 500 into 3. To equity share capital account 500 into 10. So being forfeited, 500 forfeited shares reissued at a discount of rupees 3 each. Or how you can write the narration? Being 500 forfeited shares reissued at rupees 7 each. That is 3,500, 1,500 and 5,000. So after reissue, you have to transfer the forfeited shares to capital reserve. What is your entry? Forfeited shares account data to capital reserve. Now how much we have here in forfeited shares account? 2,500 and here 1,500. So difference of that will be transferred to capital reserve. 2,500 minus 1,500, that is 1,000 will be transferred to capital reserve. So how you can write the narration? Being forfeited shares account transferred to capital reserve. So this is a problem. Here the difference was in that where it is oversubscribed, where the number of shares which has been actually required, so the public have subscribed more than that. That is known as what? Oversubscription. So in case of oversubscription, either we have to refund that amount or it has to be transferred to share allotment account. So in this problem, we have refunded that amount where we are going to transfer that amount to bank account. Other than that, all the journal entries are same. Now go through the next type of problem. Excess application money refunded and adjusted towards allotment on shares. Now here what happened? In case of oversubscription only, here the company have oversubscribed or the public have oversubscribed the shares, and that excess application money, certain thing have been refunded, certain part have been refunded and certain part have been transferred to allotment account. So allotment on pro rata basis. So this you have to remember. Now this also is in case of oversubscription where the public have oversubscribed the shares and the excess application money have been refunded and remaining amount has been transferred to share allotment account. Now go through the problem here. Bharat Company Limited issued 10,000 shares of rupees 100 each payable as under. Now here they are going to issue 10,000 shares. Okay, of rupees how much? 100 each. Now let us see how this 100 is been collected. 20 on application, 40 on allotment and 40 on first and final call. So total 100 rupees. Applications were received for 15,000 shares. Now this is oversubscription. They need only 10,000 shares, but the public have subscribed for 15,000 shares. Okay, so 5,000 is excess here. Shares of which applications for 3,000 shares were rejected. Now what they have done, out of this 5,000 excess, what the company have done, 3,000 they have rejected. Rejected in the sense they have refund. So 3,000 rejected and the application money refunded and the remaining applications were allotted. So what they have done, remaining application, that is 2,000 shares were allotted on pro rata basis. So allotted 10,000 shares on pro rata basis, the excess adjusted towards allotment. Now what they have done, so out of 5,000, 3,000 they have refunded. At the same time, 2,000 they have transferred to share allotment account. All the shares were made and the money duly received except on first and final call on 500 shares. So 500 shareholders have not paid the first and final call money. So what the directors have decided? Directors have decided to forfeit these shares and then reissue at rupees 75. So actual value of the share is 100 rupees, but they have reissued at rupees 75. So 25 rupees is what? Discount. So which has to be transferred to forfeited shares account. Has fully paid up past the necessary journal entries. Now this will be the problem. Here quite difference is that the excess application money, in the earlier problem full excess application money has been refunded. But here only 3,000 shares they are going to refund and the other things, remaining other shares are being transferred to share allotment account. Now go through the journal entry. As usual in the application stage, 2 entry. One is receive and the next one is transfer. Now what is a receive entry? Bank account data to equity share application account. So how much they have received? You are not going to take this 10,000. You have to take this 15,000 because on all 15,000 we have received the application money. So 15,000 into 20. So 20 is the application amount, that is 3 lakh. So write the narration being application money received on 15,000 shares of rupees 20 each. Now out of this 15,000 what they have done? Excess 5,000, 3,000 they have refunded and 2,000 transferred to share allotment account. So your next entry is for what? Transfer. Equity share application account data to equity share capital to share allotment to bank account. So how to write? Equity share application 15,000 into 20 we have actually received, that is 3 lakh. So how much we had actually required? Required is only 10,000. So 10,000 into 20 will be transferred to equity share capital. How much we have refunded? That is 3,000. So that will be transferred to bank account, 3,000 into 20. Remaining excess, that is 2,000. So that 2,000, here I have shown you, this 2,000 will be transferred to share allotment account. So 2,000 into 20, that is 40,000 will be transferred to share allotment account. So this one is extra here. After refunding, if any excess share is there, it has to be transferred to equity share allotment account. So how you can write the narration? Being application money received on 15,000 shares and the excess of rupees 3,000 is been refunded and remaining 2,000 is been transferred to share allotment account. So this is about application stage. Hereafter your entry will remain same under allotment, call, forfeiture, reissue as well as transfer to capital reserve. Now come to the allotment stage. So here also you have to record 2 entry. One is due, other one is receive. Now what is a due entry? Equity share allotment account data to equity share capital account. So how much amount is due? So you are going to take this 10,000. 10,000 into 40. So 10,000 into 40, that is 4 lakh. So the narration can be being allotment money due on 10,000 shares of rupees 40 each. Next entry is for receiving. So, bank account data to equity share allotment account. Now, here you have to be very careful. 4 lakh they had to receive. That is 10,000 into 40 they had to receive. But in the application stage, they have transferred few amount to allotment. That is excess amount they have transferred. So, this you have to minus. That is how much? 40,000 you have to minus. Why you have to minus 40,000? Because in the application stage, they have received excess application money and they have refunded, and the remaining will be transferred to share allotment account. So, this 40,000 you have to minus, then you have to receive the allotment money. So, how do you write? Bank account data to equity share allotment account 4 lakh minus that 40,000. So, how much you'll get? 3,60,000. So, how you can write the narration? Being share allotment money received after adjusting excess application money of rupees 40,000. Next one is call stage. Here also 2 entry. One is due, other one is receive. Now, what is the due entry? Equity share first and final call account data to equity share capital account. What is the number of shares? 10,000 into 40. So, 10,000 into 40, that is 4 lakh. So, how you can write the narration? Being first and final call money received on 10,000 shares of rupees 40 each. Whether all the shareholders have paid the first and final call money? No. So, there are certain shareholders who failed to pay the first and final call money, that is 500 shareholders. So, out of 10,000, 500 shareholders have not paid, that is 10,000 minus 500. So, how many shareholders? 9,500 shareholders. Only they have paid the first and final call money. So, how you can write the entry? That is bank account data to share first and final call account, that is 9,500 into 40, that is 3,80,000. That is receiving of call money. Now, since 500 shareholders have not paid, so their share have to be forfeited or cancelled. Now, what is a forfeiture entry? Equity share capital account to forfeited shares account to share first and final call account. It is 500 into 100, the face value of the share, that is 50,000. Out of 100 rupees, how much they have received? They have received application and allotment money. So, how much is application and allotment money? 20 plus 40, 60 rupees they have received. That has to be transferred to forfeited shares account. So, 500 into 60, that is 30,000. How much they have not received? 40 rupees they have not received. That has to be transferred to equity share first and final call account. 500 into 20,000. So, being 500 shares forfeited for not paying the first and final call money on 500 shares. So, this is about your forfeiture. Next is reissue. Reissue entry. Now, at what price they have reissued? Now, go through the problem. So, they have reissued at rupees 75. So, actual value of the share is how much? 100. They have reissued at 75. Discount is how much? 25, which has to be transferred to forfeited shares account. So, what would be our entry for reissue? Bank account data 500 into 75. Forfeited shares account 500 into 25. So, this is the discount which has to be transferred to forfeited shares account. To share capital account 500 into 100. So, here they are going to reissue at a discount of rupees 25, which has been transferred to forfeited shares account. So, how you can write the narration? Being 500 shares forfeited at a discount of rupees 25 each. So, this is about reissue. Next, your last entry is for what? Transferring of forfeited shares to capital reserve. Your entry will be forfeited shares account data to capital reserve. Now, how much is there in your forfeited shares account? So, here it is 30,000 and here it is 12,500. So, 30,000 minus 12,500, remaining amount will be transferred to capital reserve, that is 17,500. So, this 17,500 will be transferred to capital reserve. So, these are the 9 journal entry what you have to learn from this chapter, that is accounting for share capital. Only few changes you have to make depending upon the conditions or depending upon the question how they have given, you have to make few changes. Other than that, all the 9 journal entries will be similar, but you have to know how you have to put the amount to those journal entry. Hope you have understood this problem. So in this problem, a quite difference was there, that is regarding your allotment money or the excess money which has been transferred to allotment account. So in my next session, we shall solve few more problems with different type of questions or different type of situations. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.